Crypto Hotep here with another investing video. We are on week 90 of the family portfolio and dividends tracker. I really appreciate you guys tuning in as always, and Happy New Year. This is the first recording of the new year, guys, and I do want to say thank you again. We've really grown the channel. In 1 year, we've accrued over 125 new subscribers. So you guys really like watching the videos, spreading the word, and getting new people into the channel, liking the videos as well. So really appreciate that, and just looking to keep doing it this in 2026 here. If this is your first time watching these portfolio tracking videos, feel free, go to the channel, go to week number 1. And that's where I go through my whole methodology on why I'm doing this. We're almost about 2 years into this journey, this investment journey with me and my family. So basically, I shortlisted some stocks for them to choose from. They chose the ones that they most resonated with, companies that they know. And we proceed to use M1 Finance as our broker of choice because you can build a portfolio and have sub-portfolios in it. And so each week we go through this portfolio, rain, sleet, or shine. Whether we're doing good, whether we're doing bad, and we just document the whole investment journey, how we're feeling, dividend activity, balances, any buys that we have, anything like that. This isn't day trading. This is strictly investing. But if these videos are helpful for you guys and they make you stay on the course for investing, please like, subscribe, comment, share it. Let me know what you guys are investing in, all that. It helps the algorithm, which in turn helps the channel. But before we hop in here, we always go to the market news first. So market news, between Christmas and New Year's, there's always a lull. There's always a lull period, very quiet period in the markets here. So not a lot of stuff's been going on. But December 31st, President Trump signed an executive order delaying tariff increases on upholstered furniture, kitchen cabinets, vanities for 12 months. Whenever we can have a delay in tariff increases, the markets like it, right? The other thing here is the Kobesi letter talked about the dollar and the historic decline in 2025. So the US dollar index fell 9% in 2025, marking its worst performance since 2017. Why does that matter? Well, that matters because you want a weakening dollar if you are an investor. If you are an investor who has his or her own money in assets like Bitcoin, like stocks, like metals, gold, silver, you want a weakening dollar because the weakening dollar then perpetuates your assets to grow essentially. Why? Because it's all money rotation. Money flows from one thing to the other, right? It flows from a stable currency like the dollar, and I'm using quotations, air quotations there, to risk on assets such as crypto, stocks, and the like. So, and it's honestly, there's also a case to say, hey, you cannot save your way to wealth. You can't save money to be wealthy. If this isn't a sign, I don't know what is, because you're basically doing yourself a disservice. Say, for instance, you saved $100, right, 5 years ago. That same $100 wouldn't be able to buy you the same stuff you could buy 5 years ago. However, if you invested your money 5 years ago in the S&P 500 or Bitcoin or gold, for instance, that money would be worth more than what it was when you initially put it in that investment 5 years ago. So it's all about generating that wealth, but also keeping your wealth secure and safe. And just having it in dollars, it's not going to do it. It's not going to do it at all. And I'll get off on my soapbox on that one. But before we go to week 90, let's go to week 89. Week 89 saw us with a balance in the portfolio of $3,845.55, ending 2025 with a money-weighted rate of return of 18.94%. You love to see that. Dividends earned of $33.83, market gain of $436.05. So, what happened this week? So again, we use year-to-date bounces, market gain, and money-weighted rate of return. So the percentage is going to be significantly low because we've just started the year. You can even check our previous videos last year. It was the same thing here. But our balance did go down, $3,788.74 for week 90. Negative 0.48% money weighted rate of return, negative $18.43. No dividends earned, but you know that's going to change. Let's go to our activity. The activity we had from last week to this week, we did have a deposit. So we had a deposit of $20. What did we buy with that $20? We bought Amazon, McDonald's, Cintas, Costco, Apple, Microsoft, Waste Management, and Starbucks. So we bought a lot. And again, let me get back on the soapbox here. With investing, you can invest small bits of money, increments of money in these stocks, no matter the share price. The technology that we have, and you don't even have to use M1 Finance, but the technology that we have now, it provides an easy way for you to invest into well-established companies, no matter the price, and you can put any amount in that you want. Okay, so let's go to the portfolios. So let's go to our middle's portfolio. Stands at a balance of $508.34, negative 0.06% money weighted rate of return year to date, negative 30 cents market gain here. Okay, so with our middle, Target was the Achilles heel last year. I believe Target is going to shoulder the load for our middle's portfolio. I think there's going to be a turnaround. Target looks fantastic on technicals, right? Meaning that I've looked at price charts on Target and it looks very good. It does. We're not out of the woods yet with Target, but it looks very good if they can just play their cards right. Target may have a comeback story this year. Costco, same thing with Costco. People have slept on Costco because they dipped a lot in Q4, but honestly, that's just buying opportunity for Costco. Watch out for Costco. Watch out for Amazon as well. With AI, you can't have a safer bet in AI than Google. I don't know anyone with a safer bet in Google. Sony was a big player last year. I think they're going to carry it on this year. Starbucks, and then Tesla with SpaceX, with Elon with SpaceX, and that IPO coming out this year. Watch out for Tesla. Okay? Watch out for Tesla. Let's go to our youngest. Our youngest has a balance of $536.83. Money weighted rate of return of negative 0.63%, market gain of a negative $3.39. We've talked on Tesla, we've talked on Sony, Starbucks, Costco. We've said our piece. Apple, I think Apple's going to pull back, so we may see negative headlines about Apple, talking about they've lost their mojo. Oh, are they turning back now? Just because Apple is going to fall, I believe the price on Apple is going to fall back. So I believe that's a buying opportunity on Apple. It's done this before. It's going to pull back, and then it's just going to make new all-time highs in the current year. And I believe that's going to happen for Apple again. Okay. Let's go to my wife's stocks. My wife's stock stands at $559.91, a positive 0.03% money weighted rate of return year to date, and a positive market gain of 17 cents, I should say. Google, we talked about Google. Pepsi, I believe, is a very good anchor for my wife's portfolio. Something dependable, something very boring, something that can generate some dividend income. Pepsi is a very good choice. Tesla, we talked on Tesla, and I think Microsoft's going to be the surprise in her portfolio along with Celsius. I believe Celsius is going for round 2 this year. Okay, so Celsius played a big part with my wife's success in her portfolio last year, generating year-to-date gains of over 50% for 2025. I think Celsius is going to do some numbers again. I do. So watch out for Celsius again, and then Microsoft. You can't have a better play on technology than Microsoft. Let's go to our oldest. Our oldest balance stands at $1,074.31. Money weighted rate of return year to date of a negative 1.08%. Market gain of a negative $11.71. Very simplistic portfolio here, and we're keeping the same trend. Why? Because these are very good standing companies: Apple, Costco, McDonald's, and Tesla. I'm not changing anything with these. Apple, we talked about. Costco, we talked about. McDonald's is that anchor. Just like my wife's anchor was Pepsi, I believe McDonald's is that our oldest anchor. Tesla, we talked about Tesla as well. And last but not least, let's go with mine. My portfolio stands at $1,109.35. Market gain of a negative $3.20. Money weighted rate of return of a negative 0.29%. We're not changing anything. You see a theme here? We're not changing a thing here. My technology play is Microsoft and Google, bulletproof. Finance is Moody's and Visa. I think these two are going to surprise me in the financing sector. Industrials and energy, we have Waste Management and we have Cintas. We just talked about this. But Waste Management and Cintas, two dividend compounders you can't really bet against. Real estate, I have O. I'm not adding and I'm not subtracting. O is going to be my income producing real estate sector all year round. Consumer staples and shopping, we have Costco, we talked about that, and then we have Lowe's. Again, two dividend compounders, very similar to Waste Management and Cintas. Long-standing companies, they know what they're doing, and you know what you can get with them. Pharmaceutical, we just have AbbVie, right? AbbVie was one of my biggest positions and one of my best performing positions in 2025. I think we'll see a pullback in AbbVie 100%, but I'm not doing anything with AbbVie. I like AbbVie. I like the dividend income. I'm very good keeping and holding AbbVie. And then last but not least, restaurants and food. We have the GOAT, Coca-Cola, and then we have Domino's Pizza, which Berkshire Hathaway. Shout outs to Mr. Warren Buffett. Congrats on his retirement as well. But they also hold a significant size of Domino's Pizza. I like Domino's Pizza. I like their model. I like what they're doing in the business. I like the dividend income. I'm good with Domino's Pizza all day long. But yeah, my portfolio is staying the way it is. I'm not really doing anything special, and I'm not changing anything. When I buy my stocks in my portfolio, I significantly buy the dips in the red. So I'll just buy the dips in the red for my stocks and my companies, because personally I don't care what the price is for those companies, because they're all good companies that know what they're doing. Okay. But guys, that's week 90. So for week 90 in the family portfolio, the balance is $3,788.74. Money weighted rate of return of a negative 0.48%, because the year just started. We're just getting cooking here. Market gain of a negative $18.43, and dividends earned $0 as of yet. But you know that's going to change. If these videos were helpful at all, feel free to like, subscribe, comment, guys. You know what to do. Let me know what you guys are investing in if you're able to comment. But as always, thank you guys, and happy investing.